Mickey Dickey here, and I want to give an update on PPI. And I'm going to start with this video that kind of goes over what PPI came in at, and then I have another video of a gentleman I like his analysis of, and then I'll give you my opinion on what's going on with PPI and how the market's responding to PPI.
We're waiting the August read for producer prices, the wholesale version, of course. Headline number expected to be up 0.4, is up significantly more, up 0.7%. That's the hottest read going back to June of 22 when it was up 0.9%. And if you strip out, I was looking partially at retail sales. Now, if you strip out food and energy, that was retail sales up 0.6%. X-Autos up 0.6. X-Autos and gas up 0.2. The control group up 0.1, and that's much stronger than expected. Now, that 0.7 on PPI headline I just referenced, if you strip out food and energy, it drops to 0.2, exactly as expected. And if you strip out food, energy, and trade, it's up 0.3, and that's a little bit on the hot side. Last time we were up 0.3 here was February last year. Last time we were up more than that was up 0.5% in January of this year. So we can see that those numbers have moved a little bit. And if we look at final demand year over year, and these are important, up 1.6, up 1.6. It was supposed to be up closer on expectations to up 1.3. And in the rearview mirror, that was up 0.8. That was up 0.8. Up 1.6 is actually the hottest read since April, when we were up 2.2. And if you strip out food and energy year over year, it is up 2.2%, exactly as expected. That's 0.2 shy of the 2.4 in the rearview mirror. And if you look at PPI X food, energy, and trade year over year, up 3%. That's a bit hotter than expected by 0.3, both on expectations and the rearview mirror. The last time we had a number in this.
Okay, a whole lot of information there. What I want to focus on here is that the PPI just basically came in too hot. Now, again, is it overwhelmingly hot? No. Is it hot because of most probably oil? Probably. And yes, if you see the breakdown here, and that's why I stopped it here, is if you take out food and energy, it's where it was estimated. Now, the estimation is still hotter than we hoped. Okay, so all in all, this whole report, unlike yesterday's report, is hotter than hoped and hotter than expected. Overall, again, this particular section, if you strip out food and energy, it's held its own. Now, that's about the only positive part about this report, is that in general, it's holding together. I was talking about yesterday with CPI that the core is actually still going down. Now, the core is not still going down. So again, they don't look at this as much. I don't put as much weight in this as I do with the CPI. And it's not necessarily what Fed's going to look at either. Now, what does this mean? Again, I've got another video here I want to show you from another analyst perspective. Nothing that was going to happen in the CPI or PI today was going to change what the Fed's going to do next week. Let's just get that off the table. The question becomes after next week. What happens to the Fed when we get into November and December, and what is the long term from the Fed? Again, are they going to have to, we all expect maybe another 0.25%, but do they really think that's going to be enough? And I do think that is the hesitation in the market right now is, are we at that point where we can tweak it one more 0.25% and it's going to be enough? Because the numbers don't necessarily present that. But what I like about what Jim's going to say here is what he's talking about is how the market seems to be waffling back and forth.
Scott, between good news being good news and good news being bad news. And today is a day in which good news is good news. The hot retail sales number, the jobless claims, which show that the consumer is in good shape. The consumer has jobs and he's.
Now, those of you who listen to my other videos, you'll understand what I'm talking about here. And my issue has always been a good labor force, a good read on all this is never a negative thing. I don't care what anybody says. And I know it's been a situation where we've had good news is bad news and bad news is good news. And that's what he's talking about here. But I've said this from the beginning. Good news in the labor force is never bad news. Again, it doesn't matter. It's always good news. The other parts of this, if you want to talk about being bad news is good news, I'll listen to you, but I'll never listen on the unemployment side of it. And what he's saying here is that the consumer is still strong. And what I want to point out here is that you'll listen to a lot of these guys, not him, But a lot of these guys will come on here and try to tell you just how, oh, well, the consumer's borrowing all of this and selling through all of that and all the money they got from COVID and all the blah, 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 blah. I'm sorry. It's just, it doesn't make any sense. Again, when you take averages of everything, and again, if you give out $1 million and you average it out over 1 million people, that's $1 per person. I get that, but that's not how this all works. When you take the average of a population and you say the average person has $10,000, that's not the case. What the case is that you have about 80% of the population that has less than $1,000, and you've got 20% of the population that has the majority of the money. So when you're averaging out how much money people have, it doesn't work. So when they're saying that they're spending all of the money from COVID, most of the people that make less than $100,000 a year, whatever money they got from COVID has been gone for a long time. They're not going to spend through it by the end of September. It's already gone. Now, the people who are making over 100 and have a better savings account, they're not going to spend through it ever. So the numbers they're giving you are being misinterpreted, in my opinion. It's not about what's averaged out over there. It's about the fact that the haves have and the have not. And that's where I truly look at this. As inflation continues to stay up higher for longer, if you want to use the term, it's going to continue to harm the people who make less money. And it's going to be harder for them to live. It's not going to affect the people on the higher end of the spectrum. But the higher end of the spectrum, people skew the numbers. So keep that in mind when you're looking at this. It doesn't make any sense when some of these, again, not this gentleman, but when people come on there and tell you that they're going to spend this money, they're not. Again, those people have already spent it. The people who have money are not going to spend it here. This is not going to be their effect.
Assuming it's good for the economy. Of course, that's worrisome for inflation. And the PPI number will harder than expected. When you look at those year-over-year numbers, they have 1 and 2 handles. It's hard to get really exercised about that. But I think ultimately where we are right now, we came into the month of September worried about the consumer, right? We had an uptick in unemployment on the August labor report. We had a lot of talk about delinquencies. We had those horrible retail reports last month. And so the fact that we're getting a sign that the consumer is healthy, I think the market wants that. And if the Fed hops on one more interest rate hike, I don't think they will. But if they do, I don't think that's the feather that breaks the camel's back.
Yeah.
Maybe it is, but I just don't think so. I don't think the market thinks so.
Jason, PPI hotter, retail stronger, jobless claims low.
And that's the part I want you to get out of this. The consumer is still very strong. We're not seeing the part of the economy that needs to become a problem becoming a problem. And again, I'm not talking about the folks that are on the lower end of the income scale. Those folks are living paycheck to paycheck regardless, and they're just getting by. I get it. But until we start seeing the consumer and again, I'm not talking the top 1%, but I am talking about the people who are making in the higher numbers, in the 100,000s and above. Until those folks start changing their habits and making corrections, I just don't see this being a problem. And that's why I say this is in general, even though the PPI is hotter than expected, it really turns down to how hard the Fed wants to push. I do think the market's going to look past this. I think the market's going to look at this and go, we might have another 0.25% here, but we think everything's under control. And for a period of time, you might see the market continue to push higher until you hear Powell say something different. Now, I'm not saying he's going to say anything different, but what you have to look at next week when Powell does speak is what is he going to say exactly? Because inflation the core is continuing to come down. So that's a positive thing that he can spin. But other than that, what is there to be positive about? And again, I'm never expect Powell to be positive. But as far as the market going to be able to take what he says and spin it positively, that's my question. So when I hear Powell speak next week, what I expect him to come out and to do is to not do anything, just like everybody else does. He's going to say that he's data dependent. He's going to worry about how the long-term effects of this is going to be. But for the market to look at this and actually look past it and to continue to go higher and get past the July peaks and move forward, what you're going to have to hear from Powell is, hey, we don't expect to have to go higher. Maybe a quarter, but we're not going to have to go 1% higher or 1.25% higher. All we really have to do is stay where we're at, and we think the numbers are going to continue to go down. Now, is he going to actually say that? No, but you're going to have to be able to read that into what he's saying. Because if he says something else other than that, I don't think the market is prepared for it. Now, I do think that's what's going to end up happening next week. I do think Powell's going to come out. I think he's going to say exactly what I just said. He's going to come out and say, hey, I think we've got this. We just have to stay where we're at for a long period of time until we get down to where we want it to be. If he says something more than that and saying that he's going to have to get more aggressive to get down to the rate that he wants to get down to, that's going to be an issue. Now, I do think at some point he's going to have to say that. I don't think he says it next week. I think next week he's going to take a very middle of the road line, just like he did the last couple times he's spoken. I don't see this being a major issue next week. Because again, there's nothing major that he has to deal with. Most everything is still continuing to go down. And we haven't seen shelter roll over yet. I'd like to hear him say something about shelter. I'd love to hear his comments on that. I don't think he's going to talk about it. I think you'll hear other people talk about it because it is the number on the CPI that's going to be the biggest issue to bring core down. Because I do think you're going to probably start seeing oil level off here. I don't think you're going to see it go back up to 120, 130. Again, I don't know why it would. It doesn't make sense to me. I don't even the run that it's at doesn't make any sense. So I do think you're going to see that level off. And that's going to be an issue for the top part of inflation going into next year. But I do think we're going to see real estate shelter rollover going into next year, which should moderate CPI through the next year. And then once we get to some of the higher CPI numbers and oil levels off and gets back into next year, because again, you got to look at your comps going into next year in January and February. They're going to be pretty low. So until we get to July and August next year, where oil is going to probably have been leveled off again, I don't see that coming back down. In fact, it's possible we can actually see inflation or oil help again come next year at this time, because I don't think it's going to be where it's at now going into next year. And if shelter does what we expect it to do over the next year, we can probably start seeing CPI level off and then start coming back down, especially if core continues to go down. So I don't see any major issues. I don't think this is going to change the narrative next week with Powell. So even though the PPI numbers I'm not as excited about, I'm not as happy about as I was with the CPI, I don't think the Fed actually looks at it as much. I don't think the employment numbers are going to affect anything. So I actually think this is going to help with what Powell speaks next week and what he says next week and how the market responds to it. I think the market's actually going to be going into next week, and I think it's going to be a much more positive response to what Powell says, unless he comes out of left field with something we're not expecting. So I'm actually a little more inclined to be more positive on what's going to happen next week with Powell. So again, talk to your financial advisor. Make sure your portfolio is set up the way that you want it to be set up so that you can retire when you want to retire and how you want to retire. Dickey out.